What's going on, everyone? Sid Misra here, certified financial planner. Thank you so much for tuning into my channel. I created this channel because I believe that the more you understand the financial system, the more you can use it to your advantage. And that goes for those just starting out in their financial journeys, those who have been traveling for some time, and those who are nearing their retirement. Now, in this video here is another episode in my series, Ask a Financial Advisor. I have an interesting question that I got from a client who, has a house and asked this question right here. Let me just read it out to you. The value of my house has gone up significantly due to the increased demand we see all across the country, and more specifically, my area. My question is this: because we don't have much in the way of investments, should we borrow money from the inflated equity in our house to buy stocks? What are the risks involved, and what should we be considering? A really good question, something that I see come up a decent amount. I see more and more people asking this online in different forums. I've been asked this a few times by different clients, and I thought that I would address it in this episode of Ask a Financial Advisor. Before I get into it, please, if you're finding this video valuable, give it a like. It helps YouTube push my video to others that may find it valuable as well. So for this specific question, again, using equity in your house to buy stocks and to invest, I'm going to start off by saying resounding no. Absolutely not. This is not a good idea. This is something that you should not be doing in any shape or form. This is an extremely risky strategy because what you're essentially doing is taking equity out of your house in the form of a loan to invest in the market. Now, today's date is May 10th, 2022. The markets have been in absolute turmoil since the start of the year, and this past week and a half especially. Imagine if you've taken out money to invest in the market, and that's all from a loan that you've taken out, right? That is not a good position to be in. That is something where you've probably overextended yourself. And I would liken this to taking money from a bank, taking a bank loan and trying to invest that money and to make more money off of it. At the end of the day, whether it's from your house or it's a bank loan, that loan has an obligation. You have to repay that. Now, what if the market is like it is right now? Everything is down. What do you do when you don't have the money to repay that loan? What do you do if maybe you're not able to take money out if you put it in a certain investment that has a time frame on it and you can't take money out of that? What do you do? Now, if it's just a bank loan, you'll get into trouble with the bank. If you have something as collateral, they may take that. But if you're taking out equity from your house to invest and you're not able to repay that, you've put your whole house as collateral. That is the use asset that you and your family and your loved ones need to survive. It is your shelter, right? You've put that up as a way to take money out and to make money in the market. And if you can't repay that loan, you run the risk of now the bank coming back and saying, we own your house. It is a very risky strategy because as we're seeing right now in the market, things can go south very quickly. And you could be left with no money and no way to repay that loan and eventually losing your house. And I think this speaks to a larger issue of if you don't have money to invest, you need to reevaluate your finances. Are you spending too much, right? Is your cash flow negative because you have too many expenditures? Is there a way for you to possibly increase your income to cover those costs and then have the extra money go to work in investments? And then even a deeper question on that is, did you overspend on the house that you're currently living in? There is a big difference, and I touch on this in a previous YouTube video, which I will link below. There's a big difference between being able to make the payment and actually being able to afford something. And if you own a home where all of your money is going into that home and you're not able to, let's say, satisfy your investing requirements on the outside or do the other things that are required as an adult, that means that you can't afford it. So you may want to reevaluate whether you've bought too much of a house or you've overextended yourself in that regard. So again, as a rewind and as a recap, I do not think it is a good idea. I would absolutely tell my clients to not take out equity from their house and invest it in the stock market because they think that they can make money on that. There's too many risks involved. You are putting something of so much value on the line in the hopes that your stock selections or investment selections go up. And if they don't go up, you run the risk of losing out on such an important asset to you and your family. In my opinion, it's not worth the risk. Don't even do it. Don't think about it. Reevaluate your finances and see where you can earn more money or spend less and use that extra to go put to work as an investment. Now, I hope this video was helpful. I hope this episode of Ask an Advisor was helpful. If it was, please give me a like and please subscribe so you don't miss out on any future videos. Thank you so much for tuning in. I really appreciate it. Take care.